Welcome to the Holborn Assets channel. In this series, we look at major events in the history of economics that helped to shape the world we live in today. We try and get a good mix from around the world, so if there's some major event that affected economics in your country this week, just let us know in the comments. After it was founded in 1789, the US managed to have no public debt, starting from the 8th of January 1935, lasting for just over a year. Public debt is usually expressed as a percentage of GDP. For example, the current US debt is around $20 trillion, which is about 75% of GDP. Japan, on the other hand, has half the total debt value, around $10 trillion, but that's about 250% of their GDP. The vast majority of countries in the world have a debt. They issue various government bonds and securities when they need capital, perhaps to pay for a war, or maybe to deal with inflation, or something like this. Then they slowly repay those debts over time. And public debt isn't necessarily a bad thing within certain limits. There's no real correlation between low public debt and high living conditions. Liberia, Equatorial Guinea, and North Korea have some of the lowest debt as a proportion of their GDP, but they are far from the best countries to live in. The only countries that are noticeably up are Singapore, Norway, and the UAE. The last two have giant oil reserves and good financial management. Singapore is more complex. We'll look at it in a future video. In the early 19th century, the tax on tea was an enormous part of the British economy, making up an astonishing 10% of government revenue. The tea came from China, but there had been some difficulties. The Chinese put very strict controls on foreign trade, and the East India Company, who were the biggest, most powerful company in the world, had huge debts. To increase their revenues, they ended up running an illegal opium operation in China, getting millions of Chinese addicted and leading to the Opium Wars. The British won these wars thanks to the troops they brought in from India, and they set up Hong Kong in 1842 as their trading hub. But they were worried about the control of the tea trade, so they took Chinese tea plants and offered Europeans free land in India if they grew tea, making India into the tea-producing giant it is today. In the 21st century, China has become the top tea trader once again, but now India is tea's greatest consumer. Top tea trader, bit of a tongue twister that one. Back at the start of the 17th century, San Giorgio Bank in Genoa, Italy, failed after the Spanish declared bankruptcy, defaulting on their debt to the bank. San Giorgio was the world's first bank, depending on the definition. It was founded in 1407 to help consolidate the public debt which had grown during Genoa's war with Venice. The city of Genoa had created a new type of public debt a few centuries before, called compera, and it had quickly spread to other nations. The compera was basically a clever trick to get around the church's rules about lending money. Fixed interest rates were forbidden, so the compera involved a group of individuals lending money to the state. In return, they would collect a tax from the public until the repayment date. If the debt was paid on time, they would end the tax. If it wasn't, well, they wouldn't. Since the tax was influenced by the economy, its value moved up and down, so it could not be said to be a fixed interest rate, so the church allowed it. The bank survived its Spanish liquidity problems and continued until 1805, but it laid the foundations for all modern banking. So, that was the week. Did we miss out on anything important? Leave us a comment if you'd like us to make a video on any bit of economics history, or on stuff to help you with your day-to-day finances too. Suggestions are always welcome. And give us a subscribe. We've always got new videos coming out on past, present, and future of economics, as well as simple advice to help you with your personal finances.